Good morning, everyone. Would like to welcome you all to this morning's webinar on the E-Levy. The UKGCC continues to advocate for collaborative and consultative approaches to policy making and reforms that will help reduce the cost of doing business in Ghana and create a more enabling business environment. So the Chamber is therefore organizing this tax dialogue series to discuss and continue with the engagement for public compliance and a smooth execution of the E-Levy. At this point, I'd like to hand over to our moderator for today, Mr. Abeku Jankwansa, who is a tax partner at PwC Ghana. Thank you, Abeku.
All right, so thank you very much, Sarah, and good morning to our audience. For those who may not be on the morning time zone, we can also say good afternoon or good evening, wherever you find yourself. To save us bandwidth, I would not be sharing my video until the appropriate time that I can do that, so that we can have a very insightful conversation today. And as we usually do, we'll break down our agenda into three parts. The first part is to set the scene or to provide the background. And as we've always sought to explain, the purpose for doing this is to ensure that we do not go off what we intend to discuss today, so that a few minutes, hours that we have together, we can actually achieve why we met. Then we'll spend a lot of time in a panel discussion. We recognize that the E-Levy is new, the E-Levy is developing. So my panel will have the chance to share their views. And of course, I'll treat a lot of it as preliminary because it's a new area where we all need to learn and develop. And then lastly, it's all about you. What are your questions? What contributions do you have? And as Sarah said, the whole idea for this is to have a collaborative way of dealing with matters that affects all of us. Typically, I do not share my panel until I'm done with setting the scene. But today I would want to take a different approach. And the whole idea of doing this is to let you know that we've put together a panel that hopefully should be able to address the various questions that we have as we seek to start the implementation of the E-Levy. So today on the panel, we have the head of the tax policy unit, Mr. Daniel Nier. He's obviously not a new person on this particular platform. So Dan, or as I affectionately call him, Uncle Dan, we wish to say thank you so much for responding. So when we hear that there is a new policy coming, it's more likely than not that it will definitely go through this month's table. To appreciate and get businesses ready for the implementation of the E-Levy, we need to also understand what was the thinking, and that thinking hopefully would help us implement the E-Levy and implement it well. The second person on our panel today is the head of project management unit responsible for transformation at the GRA. And obviously, these E-Levy issues that we wish to discuss today. So for those of you who have been following the media, you'd have probably seen Isaac's face on the point of view on City TV. He's been to TV3 with Jiva and so many other TV stations, including Joy News. So today, Alex, we wish to say thank you so much for joining us and coming to share your view, especially from the implementation side. And lastly, we have a tax manager in the person of Alex Fifi Youngson. Why is he on the panel? His clients have been asking him certain questions. What responses has he been given? Are there ways that he needs to reshape those responses and ensure that his clients implement the E-Levy in line with the policy and to the extent possible, in line with what the administrators, in this case, the GRA, are thinking about. Please, let us remember one thing. On this platform, we encourage collaboration. We encourage diversity. We recognize the fact that we all have different background. So as usual, let's tolerate each other's view. Let's try and find a common ground. And I would encourage you to start sending in your questions so that we can address a lot of them before the 1.5 hours is over. So to guide you, you may have 7 points, up to 7 points, could even be 2 points, questions that you can start sharing for us to address during this session. Last year, we were just planning for the year to end. And the president asked the minister responsible for finance to go to those you and I elected, those representing us in parliament, and to tell them that what they seek to do is that this country will spend about 137 or 138 billion, would raise revenue of about 100 billion, and then we'll have deficits of about 37 billion. So this was the plan. Included in that plan was something we call E-Levy, affectionately or disaffectionately called. And that E-Levy was going to give us about 7 billion out of the 80.2 billion that we need. In addition to the plans, was the issue around fees and charges. So what the minister responsible for finance had declared to parliament was that I'm proposing to increase fees and charges by 15% this year. And then subsequently, I'll do it in line with inflation. These two key policy revenue generating measures had a pushback. It wasn't as smooth as planned. So the minister was forced, if you remember, after what somebody may call the Ebri Declaration, to come and now share with us certain measures, revenue and expenditure measures that government would introduce, some of which include cutting discretionary spending by up to 30%, introducing some moratorium to stop the importation of vehicles, dealing with foreign travels, cutting fuel coupons, public sector vehicle purchases, conferences by about 50%. And all of this were meant to deal with the expenditure because there was challenges on the revenue side. And obviously we are all very much aware of the various downgrades that have come, and there was the need to take action. So the E-Levy, to a large extent, which was a key policy measure, because of the pushback, there were certain introductions that government had to do. And it's important that we understand all these things before we get into the detailed conversations, so that when we are making policy proposals to government, the policy proposals are well informed from the direction that government is going to. Having dealt with this, on the 31st of March 2022, the E-Levy law was gazetted, which meant that beyond that date, implementation subject to readiness would start. But how did we get here? So I've already talked about the fact that the budget was presented on the 17th. It included that statement. Subsequent to that, because it was going to introduce a new burden, our 1992 Constitution requires that those you and I voted for to go to Parliament give their consent by way of approving the bill to allow that E-Levy to become law. So there was an initial bill, which you can see on the left-hand side of the screen below, which had certain proposals on how the E-Levy should work. And as we typically do at PwC, we pick up the budget, we analyze it, we share our views with the general public. And some of the concerns that we raised was the fact that if the E-Levy is meant to deal with the shadow economy as captured in the 2022 budget, at least there should be some exceptions or concessions for those who were not in the shadow economy. In other words, those who were identified, recognized, seen by the GRA. And one of the change that you see from the brownish document to the whitish one includes something I'm going to talk about today called the specified merchant payment, which was included subsequent to conversations around this. Then what happened was that, as you would remember, government officials started going around the country trying to convince our fellow people on why the E-Levy should be accepted. So on the 19th, the minister had a press conference, and the minister, yes, the finance minister, had a press conference to further explain why the need for the E-Levy. Interestingly, on that same date, the Bank of Ghana issued a circular to the effect that from 1st July 2022, we must all ensure that our banks have captured our Ghana cards, because from that date, that will be the only recognized verification document for transaction. There were a couple of views that were expressed and shared with the general public on how that could be made. But the critical point we need to note here is that from 1st July, if the Bank of Ghana carries out its directive, that we need the Ghana card for the purpose of transacting. And please take note of this, because I'll come back to add certain things to it. Then in March, the Ministry of Finance issued these FAQs on the E-Levy. These FAQs on the E-Levy attempted to explain how the E-Levy would work. But within the tax framework, where does this document really sit? Can you hold the GRA to account? Or if the GRA comes to audit you, can you say that you relied on this document and so you did certain things in certain ways? Those matters, hopefully, will be discussed by our panel members as we go through. But one of the things that you note with this document is that a lot of the examples that were given, if not all, attempted or suggested that the E-Levy applies only to individuals. So a natural question that may come up is that what happens to corporate bodies when they are transacting? Should the E-Levy apply? We would be discussing that today. Then somewhere in March, the Ministry of Communication then introduced or issued a letter that, look, linking your Ghana card to your SIM should have ended on the 31st of March. But I recognize the issues, and therefore I've extended the deadline by 4 months. Let us take note of this. The Bank of Ghana, regulating financial institutions, is talking about 1st of July as the implementation date for having the Ghana card as the main or the only verification document. The Ministry of Communication has provided a deadline and said that from 1st of August, your SIM must be registered on the Ghana card. So the Ghana card is a common identifier for both financial institutions and for those that deal with the telecommunication companies. So let's take note of these date differentials. The ministry has come out to say that the E-Levy will be effective from 1st May. We'll be asking certain questions as we go on, that can the E-Levy be applied such that taxes that were not expected to be imposed by Parliament would then be imposed because certain persons have not registered with their bank or shared their Ghana card with their bank or registered their SIM with the Ghana card. Those questions would be addressed as we continue. The other thing that we need to note is that on the 29th, when we're all getting ready to go support our Black Stars, something interesting was also happening in Parliament. And the interesting thing that was happening in Parliament was on the E-Levy. So our parliamentarians on the 29th passed the E-Levy. And just on the next day, 3 of our MPs sued the government by saying that the procedure for passing the E-Levy was not proper, and hence the law was not validly passed. Just yesterday, as we were getting ready for today's conversation, an injunction application was also filed with the Supreme Court to restrain the GRA from applying or from implementing the E-Levy. And of course, it extended to the assigns or anybody. And today we're going to talk about certain entities that will be required to lead the implementation of the E-Levy. So you would see that right on top of this E-Levy law are the fact that we would encourage businesses to reach out to their consultants, could be their tax, legal consultants, and if possible, reach out even to the revenue and get certain written responses, some of which may be called a private ruling or a class ruling, on how certain areas that may not be clear to you should be implemented. So that in the day of trouble, you can always pick up that document and refer to it as basis for the decisions that you took. Moving on, if we do not get anything at all from today's session, let us remember one thing, that the E-Levy is a transaction tax when we make transfers. So it's an electronic transfer law. So if there's no transfer, we shouldn't have conversations on E-Levy. If there is transfer and the transfer is not electronic, we should not have conversations on the E-Levy. So as you can see, the act to be known as the Electronic Transfer Levy on electronic transfers to enhance revenue mobilization by broadening the tax base. So there was a base, the E-Levy came in to broaden it. And that's why you remember we did indicate that if the person is already seen, should the E-Levy really be applicable on that particular person? And we're going to have those conversations today. The E-Levy is a tax law, and so it cannot operate without relying on the Revenue Administration Act, which is a law which tries to integrate the various powers of the tax authority from January 2017. So reading the E-Levy Act alone without making reference to the Revenue Administration law would not be complete. And let us not forget that because this is a matter of tax, it ought to be imposed by Parliament. Parliament defines the boundaries of the tax, and hence we need to be careful that in the process of implementation, we do not end up introducing taxes that Parliament did not introduce. And I've already made some mention relating to the Ghana card, and we'll come back to it later. In order to ensure that we keep our conversation in perspective, there are a number of conclusions that I would quickly share with you because I'm keen on getting into the panel conversation. The first thing that we need to note is that the E-Levy is a 1.5% tax to be borne by the originator. So originator is a technical term defined in certain laws, but I'm not going to bore you with that. I'm only going to say that take it as the sender. And it's on the amount to be received by the beneficiary. So please take note. It is 1.5% on the amount to be received by the beneficiary. So if you intend your beneficiary to receive 200 and E-Levy applies, the tax rate is on the 200. It is not on the amount that you are transferring, out of which E-Levy, out of which service fees may be paid. but rather it is a percentage on the amount to be received by the beneficiary. The second point that we need to note is that E-Levy has been designed as what I choose to call an extremely narrow-based tax. What does this mean? The entities that ought to charge E-Levy have been spelled out by law. An opportunity to expand that list is required to be done by regulations. And as you may know, regulations are not issued without the involvement of those you and I voted for to sit in Parliament. And this should remind us to be very careful of those who vote into Parliament, because they will be making certain decisions that affect you and I. So another point we need to note is that it is an extremely, and I wish to repeat, an extremely narrow-based tax. In other words, those who should be involved in the collection process and the kind of transactions that are covered are clearly defined. E-Levy does not apply when certain exceptions are there. And for some of us, we hold the view that the exemptions are so powerful that it is in the main part of the E-Levy law, whilst what triggers the E-Levy is even in the schedule. And there are two different parts of the law. One of the things that we need to note is that the exemptions for the E-Levy are typically referenced to who the money is being paid to. So let me quickly give an example so that we can bring this session to a close soon. If I give myself money, E-Levy does not apply. If I am giving the government of Ghana money, E-Levy does not apply. If I am paying money to someone that is recognized by the GRA because that person has been registered with the GRA for income tax or for VAT purposes, E-Levy does not apply. And the other thing I would wish to add is that the medium of settlement may also make E-Levy not applicable. So if I wish to pay you and I pay you by check and it clears, I see a notification on my account. Even though one can argue that it's an electronic transfer, it has been exempted. So please, let's take note. E-Levy are exempted typically by reference to who the recipient is. And the recipient in this case could be myself, the government of Ghana, persons that are registered with the GRA for income tax and or for VAT. And these persons, let me add, are commercial establishments. So if a church is registered with the GRA and the church itself recognizes that it is not a commercial enterprise or establishment, then even though that registration exists, transfers to the church may, depending on certain conditions, apply. Having addressed this thing, the only general thing that we also need to note is that if I don't make cumulative transfer exceeding 100 cedis a day, E-Levy does not apply. Certain questions that I will be posing to my panel today is that what if I move money to a joint account held with my wife? Should E-Levy apply? What if I move money to a partnership account, an unlimited partnership account? Should we be having a conversation around E-Levy? I'm sure my audience will be able to at least share some preliminary view. There are questions on whether E-Levy should apply on cross-border transfers. Because when you take a look at the law, it talks about transfers for an electronic money issuer to another one or to the same person. Banks transfers. The issue is that the electronic money issuers, the banks, are all defined as entities recognized under our laws. So it could be the payment law, it could be the banks and specialist deposit taking laws. There are issues which I hope my panel will be able to address, because there are questions on when should I even remit those monies to the GRA? When should I report by filing a report to the GRA? Can these reporting lines be made administratively? And in the event that I am late by reference to that administrative directive, should penalties apply? Those are questions that hopefully my audience or my panel members will be able to address. And lastly, I've raised this previously, and I wish to emphasize again that we need to involve our consultants, we need to involve the revenue and get documents to be able to guide us. So in brief, if there's an electronic transfer, we need to find out whether the transactions are covered. And we need to ask the question whether it is exempted. The E-Levy is only that portion which is not exempted, but is an identified transfer that is covered. And that's why I said it's extremely narrow-based. Questions have been asked that if I want to do a transaction and I choose not to do it on my app in the comfort of my room, and I walk into the banking hall and I get the teller to initiate it, should E-Levy apply or it should not apply? Hopefully, my panel is picking up on all these questions and they will be addressed as we continue. So to wind down, in dealing with the E-Levy, ask yourself certain questions. What are you transferring? If you are transferring money, E-Levy applies. If you're able to transfer something other than money, so for example, Bitcoin, not recognized under our law, E-Levy should not apply. Maybe the state may come after you for criminal matters, but as far as E-Levy is concerned, E-Levy focuses on money that is transferred electronically. The parties that would make E-Levy potentially apply to you are the electronic money issuers, so the various ones, the Vodafone Cash, the MTN Mobile Money, the Airtel Money, etc. When you deal with a payment service provider, take note, it applies. When you deal with banks, including rural banks, it may apply. Savings and loan companies, finance houses, deposit-taking microfinance institutions, it may apply, and anyone that is brought in by regulations. If you use your Momo or your mobile number to transfer to another mobile number, subject to the exemptions, E-Levy may apply. If you transfer from bank to mobile money, E-Levy may apply. But subject to a minister's threshold, if you transfer from your individual account to another bank account, E-Levy may apply. Questions have come up. If I am using that account as a sole proprietor, does it attract the E-Levy? Or just by setting up a corporate body, then the E-Levy under this hand goes away? I believe very well that my panel members would address it. Remember, I talked about the fact that E-Levy may be exempted, looking at it principally from the perspective of the recipient. And then lastly, the amount of tax that you may pay when applicable is 1.5% of the difference between what is covered and what has been exempted or excluded. As a business, and remember the topic today is implications for business. Take note of these. E-Levy affects the line that you have down there just before the last point. So when you transfer something and you intend the person to receive a certain amount, E-Levy could apply. We need to be thinking about the withholding tax implications, and I know my panel members would address them accordingly. Is the E-Levy tax deductible? Should it be capitalized if the expense is a capital item? Those matters would be discussed as we go through the detailed conversation. And one of the things that audits usually come up when our friends from the GRA comes is to do a reconciliation. So they would be reconciling your tax accounts to what you've charged. So for example, you pay somebody 200, and for simplicity's sake, you pay E-Levy of 2. That becomes 202. You charge your 202 to your P&L, but in completing your withholding tax return, you stated 200. Would you remember that there was a 2 that you could not withhold tax on? And so the revenue should not raise taxes on the additional 2. This means that as businesses, we need to make sure that our reconciliations are very good. And for my clients, I keep encouraging, just as you do, say, a bank reconciliation statement, please do a tax reconciliation statement to save you in the day of trouble when the audit takes place. So a few questions that my panel will start thinking about include, when should the charging entities report to the GRA? When should the levy be remitted? Would there be late payments? How would it be determined? Would there be sanctions if the law does not expressly provide for when the filing and reporting should be done and is only done administratively? What if there's a wrong transaction? How am I going to get my refund? And let me just quickly add that. Parliament says I should transfer from myself to myself. No E-Levy applies. I've been going to the NIA office or the GRA offices to get my Ghana card. I don't even have the PIN. It's taking months. GRA starts implementing in January. I go to my bank. I tell them that that is my other account. They keep deducting because GRA says I have a common platform. Query that platform to determine whether you can apply E-Levy or not. Can I be suing both the GRA and the bank for the refund of my monies to me? Those are questions that I believe my audience would address. And as I've already talked about, what is the impact of taxes on all these things? So this sets the background. This reminds us that we are talking about E-Levy, the implications for business. We are not talking about anything otherwise than this. So once again, just to remind you, I have a panel of 3, the head of the tax policy unit, the units that guided this policy, presented it. 2, ultimately 2 are reps. Isaac, who sits with our GRA, his responsibility to try to implement it to the extent that he understands and his team understands what is going on. And lastly, from the view of a tax consultant. So audience, thank you so much. And I would be requesting for preliminary comments. So Dan, let me start with you. In the next 3 to 5 minutes, you are free to share your opening remarks with us. You are free to address any portion of the presentation that have been made. You are free to make any corrections or share other perspectives. And then I would move to Isaac and then to Alex, whilst I monitor the questions that are coming in. And then we can begin having an insightful conversation. So thank you. So Dan, let me start with you. You can unmute. And then in the next 3 to 5 minutes, please make your comments. Thank you very much.
All right, thank you, Abeku. And I mean, if I attempt to address the issues you raised, I'm sure I'll spend over an hour, so I'll just give a few opening remarks. I think we are all aware of what led to the E-Levy, as there's the need where we need to, let's use the word, leapfrog a bit when it comes to our revenue generation. And so the E-Levy was looked at as one of the things that will help get that one done. It is not a panacea, as sometimes some people seem to think it is. But then it is quite a bit of additional income that will help us to achieve our revenue targets and move ahead a bit faster than we are going. And the key things that we are looking at is to, and I use the word help, improve road infrastructure because it provides additional money. Look at our digital transformation and cybersecurity. And interestingly enough, one thing we all forget about is that the interoperability that we have right now, and a few other things we have digitally that creates the backbone for business and everybody to use, are things that were funded by government, and government continues to fund those things. So there is quite an amount, a lot of money going into technology for the benefit of everybody and forms a backbone and a basis for a lot of the things that we do. And so the E-Levy is supposed to help continue with some of those things. We have a big issue with youth employment, and there are quite a number of initiatives government expects that the E-Levy will help to support. not, and as I say that, let us also remember there were quite a number of policies that came in the 2022 budget, aside of E-Levy. E-Levy seems to have overshadowed all the others. But quite a number of things that we are still doing in terms of tax policy to make sure that things go on. So E-Levy is not the end of the world. It's just a catalyst that we expect will help us to get some of the things done that we need to do. Abeku has talked about those who are chargeable and what is it. One thing that sometimes crops up, and E-Levy is what some of us call new thinking, because you cannot institute it as a purely consumption tax or as an indirect tax on transactions, or as an income tax on your income, or some wealth tax as people choose to call it. Because in one instance, it's on transactions, but if I'm transferring money to somebody, it is not necessarily, may not necessarily be for anything. I might just be sending the person a gift, and I still have to pay the levy on it. So it falls in between those two things, that a pure transaction tax and a tax on a transfer. So basically, that's why, for those of us who looked at it, there's some, in the budget, we talked about an electronic transactions levy, but then in the actual bill, we shifted it to a transfer levy for it to have that identity of its own that it has. The rate we all know initially was 1.75%, which we brought to 1.5%. It covered quite a number of items if you look in the budget, which later on we revised and come out with the current ones that it is on. I'm not going to go over them. Abeku has gone over them already. And so generally, the idea is to raise revenue and widen the net. And the question was, how do you widen the net? And that's where the issue of the specialized merchant payments comes in. I'm sure we'll talk a little more about it later. But the idea is that if you're already registered with the GRA for income tax and or VAT, income tax or VAT, nothing. You might have a taxpayer identification number, but if that commercial establishment is not registered with GRA for income tax or VAT, your clients do not get the benefit of the exclusion of the E-Levy. Your clients will pay the E-Levy. And therefore, for that, that's something that we are trying to actually use to influence customer behavior. That, look, I don't want to pay E-Levy, so then let me go to somebody who is registered, and so I'll save having to pay E-Levy. And so for business, one of the big things for business is that make sure that you're registered with the GRA for income tax or VAT, and you're complying accordingly to be sure that your clients will not move to the person who is registered. And so that's one of the key things that is being looked at. There's the interesting issue about the dates for the rollout or the conclusion of the registrations. For the issue of the banks, there's straightforward. Abeku referred to the Revenue Administration Act. The Revenue Administration Act required everybody who has an account with the banks to have a TIN. It has been in existence since 2016. So really, for those of us who have bank accounts, and I remember the banks sent out forms and asking everybody to complete their TINs, and people just ignored it. And so if tomorrow you happen to have a problem because you don't have a TIN, and the TIN, the national ID card number is the same for the TIN. If you had a TIN previously, all GRA does is they've linked to your two numbers, so you don't have a problem. But if you don't have either of them, then you have a problem which is of your own making and not of anybody's making. And so sometimes for this, I wish to just encourage us that, look, there are a lot of laws that are there in terms of revenue, which we are not following. But one day they all come to haunt us. So it is important to make sure that we do the things we are supposed to do, so that when something like this is happening and the policy has a foundation which already exists, we don't get ourselves or our fingers bent. So these are just a few of the things I want to draw attention to. He's raised issues which I think we'll be looking on as we're going along. Let's just know that the GRA will come out with practice notes and guidelines on a lot of things that are being done There's a lot of consultation still going on to determine some of the questions that are being raised in terms of the law as it stands and the Revenue Administration Act. Just make sure that everything is in line with the law. There's nothing that happens, that the law is fair, the implementation is fair, so that everybody gets what they should get out of it. And government also gets the needed revenue to be able to do some of the things that it plans to do. Thank you for that, Abeku. So when we get into the questions, I think I'll talk a bit more then.
Great. Thank you very much, Dan. And I should say I should be comforted. And I already have about 17 questions already. I'll come back to you. I'm comforted by the fact that the implementation will be fair. There's a reason why I kept insisting that it's a very narrow-based tax. I kept insisting that it's only Parliament. I kept insisting that Parliament was clear in what they want. And I kept insisting that as regards implementation, we need to be extremely careful in order not to impose taxes through implementation that Parliament never sought to do. So I'll be coming back to you. Let me move to Isaac. Isaac, over to you, sir. Give me your initial comments, and then we would continue the conversation. Thanks.
Hello, thank you, Abeku, for the opportunity. My initial comment would be on our work so far, on our engagement with the charging party, making them ready to be able to implement the E-Levy by the 1st of May. So we've had a number of engagement with the key stakeholders. That will be the telcos chambers, the association of the PSPs, the association of bankers. We're still engaging some entities that we haven't been able to. So within this week, we're still engaging with the specialized deposit taking institutions, just so we'll make them ready for the 1st of May. We've also taken notice of the different business models that the different charging entities are using. A typical example will be the cash in that is done by the electronic money issuers or the telcos or the mobile money operators. The business model looks like it is a transfer, but the spirit of it is a deposit, that when you go to the bank and you are depositing money into your bank account, it is not looked at in the sense of an electronic transfer. So for us, we are looking at the same spirit behind the fact that I'm putting money in my account, and that is the first time I get value for that transaction. In the spirit of the law, the E-Levy law, it doesn't qualify as a taxable transfer. And for that matter, we are sticking to the fact that a cash in to your mobile money wallet should be classified as a deposit to your bank account, and the two should be treated identically. In that same vein, we are also looking at the fact that if you are making a withdrawal from your bank account, the spirit behind it is that my money is electronic and I am converting it into cash. It doesn't technically look like it's a transfer. So if you do cash out at the mobile money joint, we expect that that would also be treated in that same vein. So it looks a bit gray for us. Probably someone have to test the law whether our understanding that the spirit behind these transactions does not look like electronic transfer, then we won't apply the levy on them. We're also looking at a requirement for the charging entities to connect to a common platform that will serve as an adjudicator, because the law imposes a certain obligation where when you are making the transfer, as Abeku said already, you need to be mindful of the identity of the beneficiary. So for that requirement, it will not be within the capability of a single charging entity to be able to perform that activity. So we've brought in a middleware where each transfer, you consult the middleware and it will tell you the identity of who the beneficiary person is, and the only identity required, as you've rightfully said, is the Ghana card or the taxpayer identification number for corporate entities, and for individuals, the Ghana card number, or sometimes their own personal, personal taxpayer identification number as well. Now, this adjudication will cover the minimum threshold of 100 Ghana cedis a day across all the platforms that a person owns. So that brings to perspective the role of the middleware, which is a system that GRA has built, and is asking the charging entities, because their platforms are digital in nature, to digitally connect to this common platform or the middleware. You talked about how long are they required to remit the e-levies collected to the central government. My initial reaction is that last year we implemented what we call the cashless project, which involves all money being received for taxes not to be paid directly to any officer of the GRA, but to use the digital means, or you walk to a banking hall to make such a transaction. Now, in that project, we have an electronic way of remitting those taxes that have been paid to the bank to the central account. And for the banks, we were doing that within 48 hours. And this is a seamless electronic system that is connected to all the 23 banks who are on that platform. Automatically, without their involvement, it sweeps the money to the central bank. Now, we intend to use that same approach for the e-levy, except that this time the minister wants us to do that in a lesser time. So we are looking at 24 hours or within 24 hours to remit same. There are questions on reversals or refunds. We've taken cognizance of the fact that there would be wrongful charges, there will be system errors. I mean, anything that can occasion a reversal or a refund. So we're looking at two scenarios here. A reversal that is occasioned before the money is swept to the BOG. That we believe can be within the capacity of the charging entities. So when such transactions are noted before the monies are swept, we expect the charging entities to automatically refund the money, including the e-levy charge. The second scenario is after they've sent the monies to the BOG, and then there's the need for a reversal. We've come out with a mechanism that they are going to work out, and that mechanism is also being automated, and it is also leveraging on the existing refund policies of the charging entities. With our engagement with some of the major charging entities, they have a 15 working day period within which, if a refund or a reversal is occasioned, you apply to them, and then within that period, they're able to refund your money back after they've done their own internal audits and some other due diligence. So we are leveraging on the same period within the 15 working days. Once they are comfortable that it is a valid refund, once they refund the principal to you, GRA will assist them to refund the e-levy that has been deducted through the central revenue account of GRA for the main refunds. So that is something that we are working on for the refunds. We also working, as Dan had already said, we are working on the administrative guidelines that will guide the public to be compliant. We are working on the communication plan. So that is why within this week, I've been moving from station to station, setting the tone for the massive communication plan. And then also, I want to reiterate the fact that the Ghana card is the only recognized identifier that we're going to use. And the legal basis is that the regulation that made this the only identifier is as far back as 2012. So it is not wholly true that we are just starting or we are now just making the Ghana card the only identification document within the country. This will be my initial comment, Abib. Thank you.
So thank you very much, Isaac. And we'll then move to Alex, and obviously we'll be coming back to you with a lot of questions. Thank you. So Alex, over to you. What are your preliminary comments?
Thank you, Abeku. So for me, my preliminary comments has to do more with what the Electronic Transfer Levy Act did not say than even what it did say. So for example, we have just heard talk about certain things like timelines within which the charging entities have to transfer these amounts collected to the Bank of Ghana. Of course, Act 1075 gives room for the minister to make additional regulations. But in the absence of such regulations, I'm just wondering what is the legal basis for them being required to do that within that timeline? And if there is a breach, like I think Abeku, you asked early on, will there be penalties? And what will be the basis for that penalty? And then also when it comes to the issue of refunds, I think that it is interesting, a point that was made about cash-ins. So assuming, and we all wait to see the extent to which cash-ins will be exempted. But in case, for example, someone goes to a Momo agent to go make a transfer and the person leaves that place, and then there is a mistake in that transfer, how is the refund given back to that very same person? I think that there could be some challenges with that refund process. And then once again, I mean, I think this is one aspect that has been largely silent, but then looking at the second schedule of Act 1075, especially the fifth item, talking about the transactions that are covered, we see that transfers originating from the bank account of an individual is included. Now, in this case, what it essentially means, or at least it can be read into, that any transaction by an individual, including, for example, to non-residents, to make payments to outside parties, could still possibly face this E-Levy. I have always tried to look very critically sometimes, and also to analyze the idea about expanding the tax net. And the question that I keep asking myself is, well, I mean, that is a good objective, all right, but given the public backlash, given the idea that it could have possible negative repercussions for digitalization of the national economy and all the other objections that have been raised, what about the incidence or the person required to make the payment of the levy? What about it being moved away from the originator and that burden rather being put on the beneficiary? So for example, it is already known that businesses that are registered, whether for corporate tax or VAT with the Revenue Authority, are exempt from this E-Levy. However, what about the scenario where instead of the person making the payment, having to pay additionally for the E-Levy? What about if the charging entities, the telcos, the banks, the specialized deposit-taking entities, etc., what about if they rather withhold that amount from the total amount that is supposed to go to the beneficiary? In that case, in my view, wouldn't it rather serve as an incentive where the beneficiary or the business that is not duly registered, wanting to avoid a continual withholding, of course, without a credit, on their revenues. In order to avoid that, wouldn't it rather be an incentive for them to go register with the Ghana Revenue Authority? And then also in that same vein, for the person who is issuing or who is originating the transaction, because he or she is not feeling any impact, and it's just the same way as it used to be from his side, his or her side, there would be less discouragement to not wanting to use mobile money and other electronic transfer options. So these are my preliminary comments about maybe possibly what could come out in form of regulations to give a legal basis to some of the aspects that are covered by the law, what could come in the form of guidelines, and then also making sure that if there are any amendments anytime soon, the amendments are shaped in such a way that they address the core concerns that have been raised so far. And then Abeko, maybe just before I leave off, I think in your opening preparatory remarks, you mentioned something to do with an injunction that has been filed recently, and then also the fact that it is being challenged. Of course, I would not pretend to know the outcome of what that challenge would be. But if for any reason at all, the injunction or the final outcome results in the law being put on hold, would there be a refund? Maybe this is something that maybe Isaac could help with. Would there be a refund, for example, to those who have already transacted or been charged the E-Levy, especially considering that the hearing for the injunction is, I think, on the 4th of May, and E-Levy is supposed to go live from 1st of May. So these are some of the initial thoughts that come to mind. Abeko, as we continue the discussion, I'll be happy to share some additional thoughts. Thank you.
All right, so thank you very much, Alex. And I've just been monitoring the time that was spent by each of my panel member. And even though I gave a maximum of 5, the minimum that has been done is about 8. So Sarah and our friends at UKGCC, it's looking like the 1.5 hours you gave to us was not sufficient, but we'll manage. To my panel members too, there are a number of questions in the Q&A, which I would read out for you to answer. But if you feel like also typing in the response, so that we could use so many options to address a lot of questions within the limited time that we have, that would obviously be great. And for those that want to ask questions by voice, I would also permit that by the show of hand, but I would manage it intermittently so that I address everybody's needs within the 30 minutes or so that we have, unless we agree to a little bit of an extension to address all the questions. So maybe let me start. And I feel a number of the questions would have been addressed from the presentation and from the initial comment, but I would read them out so that we can all engage and have a conversation. So maybe let me start with Isaac. So there's a question from Alfred, which says that, does the E-Levy applies to corporate transfers when making payment to their subcontractors? I know there are certain aspects which makes this unclear, but you could add, Isaac, you could add certain bits to it and address the question. So let me take it again. Does the E-Levy apply to corporate transfers when making payments to their subcontractors? Thank you.
Okay, thank you, Abiku. As you said, the question is not so clear about what type of corporate transfers that are being talked about here, but I'll attempt at breaking it down. So if you look at the law as it is, there could be a corporate wallet, which also is a corporate account. So a company would register a mobile money wallet and can use that mobile money wallet to make transfers or payments on a corporate wallet. Also, a company or a corporate entity can have a corporate bank account and also make transfers from that to make payment to subcontractors. So we need to identify which of the flows this corporate lies. So if it's a corporate wallet, then looking at the coverage of the Act, there's no exemption for corporate wallets. If you are using it to make payment to any mobile money wallet, there's no exemption. If it comes to corporate bank accounts, insofar as the corporate bank account is terminating at another bank account, it is out of scope. The law didn't mention that. So we can nicely say that the E-Levy doesn't cover. But if that corporate bank account is terminating at a mobile money, then it qualifies for E-Levy to be imposed. Now, I'm done with explaining the transfers. But within the bigger transfer is a subset which we call payments. And that is where the specified merchant payment comes in. So ordinarily, all transfers come within the scope of the law. But if the transfer falls in the scope of payment, then there is some bit of calculation that has to be done here. Insofar as the subcontractor is registered with the GRA, that is the first requirement, then it qualifies for exemption. But the specified merchant payment did not end there. It specified how the payment should be made. So that payment should be done electronically. So if you are not making the payment electronically, that is by check and maybe cash, you cash it out and pay, you move out of the scope of the E-Levy Act. So insofar as your settlement of the payment to the subcontractor is by use of a payment service, and the subcontractor is duly registered for income tax or VAT, then irrespective of the account he owns, whether it's a mobile money account that it is terminating at or a bank account that the subcontractor is having, the E-Levy doesn't apply. So it is not a straightforward answer if you look at it in that light. I hope I've answered it.
All right.
Well.
So thank you. Thank you very much, Alex. I'm sorry, Isaac. So just to add, you can see the third and fourth brackets that you have on your screen. So the first, as Isaac is saying, if you move from bank to mobile money, the initial trigger is that you may have an E-Levy consequence. However, if that transfer is made to a specified merchant payment, and one of the takeaway points we need to note is that GRA says to be able to carry out what Parliament approved, they want to be able to identify the recipient as a specified merchant payment in their system also, which was what Isaac calls the common platform. And I think today Isaac has also mentioned middleware, and some people to here calling it EMAX. And Isaac, please correct me if I've misinterpreted what you call it. So if you do a transfer from your mobile money to, say, from your bank to the mobile money of the subcontractor, and that subcontractor is identified within the common platform as specified. In other words, the banks should have reported to the revenue that this guy is registered, or the revenue should have updated the system accordingly. If that happens, then the transaction would not be. Maybe the question I have for Isaac before continuing is that, Isaac, I transferred, I noticed that I was asked to pay E-Levy. I then bring an evidence to the bank that at the material point of the transfer, the entity I was paying was registered with the GRA. Can I get my refund? Thank you.
Okay, so for this particular question, it's so specific, and it involves a lot of what do you call investigation. As I've already said, we do not want to impose any new restriction on businesses. That is why the agreement is that we are leveraging on the the business expertise of the charging entities. The charging entities have a way of refunds, which we are not going to alter. We believe that whatever internal mechanism that they have to do their refund, they should exhaust it and advise the GRA. Once they advise the GRA, we would, for ease of doing business, we are thinking we will err on side of business. So we will take the word of the charging entities that this refund is valid. But we have a second chance to come at it again during audit, where if the refund, despite the fact that the charging entity okayed it, but our investigation showed that it isn't okay, we can surcharge the charging entity and that will not come under E-Levy. That would have come under the Revenue Administration Act or any other act, which even the E-Levy gives the free hand to the Commissioner General to use the Revenue Administration Act and any tax act that is applicable. So for this one, that is how I would respond. Thank you.
All right. No, thank you, Isaac. It's comforting. So we would approach the banks when there are certain deductions from our account which should not be. The next question I can see Dan is typing, so let me allow him to respond. The question was whether there was any research done on income segmentation or flow of Ghanaians before the E-Levy was introduced. I would leave that and allow Dan to address it. So let me come to Alex. Alex, maybe based on
yes, I couldn't type it in. I couldn't type it, so I'm gonna have to give. Yeah. Okay. So let me just quickly add it. Yes, there was some research done, and in fact, basically, it's one of the things that influenced the 100%, 100 cedi threshold. Because I realized that from the survey that we did, about 40% of the people who we surveyed were actually doing less than 100 cedis a day. We're not doing that much in terms of the way they were using mobile money. So that's at least was one of the things that influenced it. We looked at the nature, we had discussions with people as to what they look at. So we had some discussions. Then in doing that, let me just touch on what Alex said in terms of the alternate policy. And when policy making is being done, several options are looked at, and one option is chosen. So it's not as if all the other options were not looked at, but all options were looked at and they were weighed. And in terms of what seemed to be more feasible at this point in time is what was chosen. And so all these things were looked at. I also add quickly that the issue of legality has been raised in terms of application of these things. Let's know that the laws are looked at as a whole. We can't bring all the laws into one document, which is why we make references. So the Revenue Administration Act has what it provides. There's the PFM Act, the Public Financial Management Act and its regulations, which governs receipt of government revenue and how it is treated. The Bank of Ghana itself has the Payment Services Systems Act, which governs the PSPs, that includes the EMIs. So there are a lot of rules and regulations which operate in tandem in applying this law. So let's just note that as we go on, that all these things play, all of these things have certain relations. I realize that Abeku showed a few of the relations earlier on. So let's keep that one in the back of our minds, that there are things we might not necessarily find in terms of the law even in the REA or even the E-Levy Act itself, but are provided for in other laws and they impinge on what is being done. Thank you.
All right, so thank you very much, Dan. Isaac, permit me to come to you on this. So the one asking the question is saying that the specified merchant payment is not too clear. So can GRA and MOF share light on the definition and the rationale behind it? I think I dealt with it in the presentation, but Isaac, you can go back to it again. Does it mean that loan disbursement from banks or Momo account to Momo account will be exempted from the E-Levy? Isaac, I don't know whether you got a question. The person wants to understand specified merchant payments The person wants to understand the rationale behind it. The person wants to know whether if loan disbursement from banks or from the Momo companies to their Momo accounts will be exempted from E-Levy. So even before you address that, I want to repeat that E-Levy is a tax on the transfer roll when it applies. The exemptions are typically looked at where the recipient or the beneficiary, which is the term used by the law, is linked to an exemption. So Isaac, over to you. Thank you.
Okay, Abeku, so if I got the question right, it's a loaded question. One is I should give
you should clarify merchant
specified merchant payment. Is that it? Clarify.
Yes.
Okay.
Clarify. The second one is in clarifying what was the rationale behind that.
Okay.
There's the rationale behind the exclusion. So I talked about it when I started that there was an
you have already talked about it, yes.
But please talk about it again.
Okay.
And does it mean that loan disbursements from bank to Momo accounts, or Momo account will be exempted from the E-Levy? That's the question that person is asking.
That will be the next one. Okay.
Yes.
Okay.
Thanks.
So almost like 3 questions. So let me start with the rationale behind the specified merchant payment. As Abiku had already rightfully said, the Act is not trying to disturb businesses. So if you're a business and you're already compliant with the tax laws, the Act is not targeting you, because there is the case that the object of the Act is that they want to rope in the base. I mean, they want the base to be broadened. And one way of broadening it is bringing in people who are operating but are not compliant with the tax laws. So that is the rationale, that insofar as a business is operating and is compliant with the tax laws, the Act doesn't target your business transactions. If anybody makes payment to you, such payments should not attract the E-Levy. So that is the rationale. Protect the businesses on the digital platform. That's the rationale. Now, further explanation that I should give is that it is not a one step to qualify as a specified merchant. It goes through some kind of iteration. The first iteration is that you should be a compliant taxpayer at the GRA end for income tax or VAT. You should have that status, that there's you are compliant there. Dan talked about the fact that we were differentiating between registration and also being registered for income tax or VAT, because you could just be registered for the taxpayer identification number, so it helps you clear a good at the port, and then off you go, a one-time transaction. But we may not pursue you for tax purposes. But if you look at the intent of this particular one, it is for the fact that you are compliant to register for income tax or VAT. It's not just being registered and then you lie dormant, but to be compliant. So that is the first step that a merchant would have to cross to be registered for income tax or VAT. The next one that you have to also comply with is that you now have to approach any of the charging parties and ask to be placed on their merchant list, because they have customers who are different from their merchants. The banks have that arrangement where they provide POS to shops and other online channels to use for their trading, so people can pay them through debit and credit cards. So once you settle with the part about being active taxpayer on the GRA side, you need to take another step with any of the charging parties that is listed and apply to be a merchant. Then that qualifies you to be on the payment service. But if you have just registered with GRA, you have not made a second attempt at being on a payment service, you don't qualify. So just having a bank account or a Momo account and being registered with the Ghana Revenue Authority does not qualify you as a specified merchant, because the intention of the GRA is that we then request the charging entities that give us your specified merchants. And that is what we are going to use to build the base on our system that when you consult the middleware or the common platform, it will check the status on that role. So if you have not done that agreement between yourself and any of the charging party, you don't qualify. So once that has been established, you are compliant at GRA, income tax, or VAT, you've made a request as a charging party, they've also placed you on their list. Then the exemption will kick in for anybody that makes payment through the channel the charging entity will provide you. So we have to make that distinction, because some people are thinking that I don't need to do anything with my charging entity. I have my Momo wallet. I'm registered with the Ghana Revenue Authority. Anybody who transfers to me qualifies as a payment, and therefore that person should not be charged. No, it goes through a kind of cycle before you qualify to be a specified merchant. So I'm done with the rationale and how the specified merchant works. I'll go to the loan disbursement from the charging. I mean, you give an example of your bank if they disburse loan to you.
Yes, loans.
Yes. So for this, it's not straightforward. In fact, with this act, a lot of things are not straightforward. So sometimes you have to go through some kind of iteration before you would be able to answer certain questions. So I must send a disclaimer that some of my answers are not really, I don't know the word to use.
Isaac, don't worry. That's why from the beginning I said this is a new law. I said they should treat it as preliminary. I said comments from my panel, if anybody wants to hold you to it, they should be writing to the CJ for a private or class ruling, or they should be talking to their consultant. So don't worry, feel free and express your opinion at this stage. Thank you.
Okay, so this is the understanding that we are working with. We are working with the understanding that insofar as the charging party is in the business of giving loans and have license from the regulator, the BOG, to do that kind of business line, then it is part of the business operation that such charging parties will create personal accounts for the people who are asking for the loan. So if it's a bank, the bank would have a bank account that you own in your name. If it is a specialized deposit-taking institution that is giving the loan, they will have an account that belongs to you. So if it's MTN that has been given the right to do MTN loan, you would have an account with MTN. So if you go with that understanding, then at the bank, they are only crediting your bank account with the money you've requested. So you make an application to the bank, I want 10,000 through an application. The bank approves it and it is crediting your account. Technically, it wouldn't have qualified as a transfer from a corporate account of the bank to you. It would just be the bank crediting you for a facility that you've requested. So if we go with that understanding, then we believe that is out of scope and the E-Levy shouldn't apply. But there may be other use cases where you are not dealing with a licensed operator who is disbursing loan. For that, insofar as the loan is moving from a corporate bank account and it is terminating at a mobile money account, then for us, it falls within the scope of the E-Levy. That's the explanation I'll give.
So thank you, Isaac. But let me quickly add, and it's important because I raised this based on other jurisdictions I've worked in. If E-Levy starts showing its face, Isaac has made mention of something called out of scope, where you will not see it expressly written in the law. The other bit is to check the exemptions, but I choose to call it exclusions. Maybe I just enjoy that word. So even if the money generated from a bank account to a mobile money, and the reason you contracted that loan is that payment is made to a specified merchant payment, our view is that it should not arise. Now, when Isaac was sharing his views, and I keep saying preliminary views, certain comments were made, and I would want to make an appeal to Dan as someone in the supervising ministry to help ensure that the revenue does not go beyond the scope defined by Parliament. So, for example, a merchant has been clearly defined as a commercial establishment registered with the GRA for income tax or VAT. Specified merchant payments are payments made to merchants through a payment service to a person registered with GRA for the purposes of income tax and VAT. Nowhere in these definitions have issues of compliance come up. The revenue has the power to go do audit on any entity that it chooses to and raise liabilities. If the revenue introduces as a blockade to the implementation of this law, to my mind, we are going to get a stage where another APAC and GRA issue may come up, where you now are forced to go to court and the court makes certain provisions of an administrative note inoperative. So please, let's avoid that. When it happened years ago in the APAC case, and I keep saying that when I look at how we administer taxes in Ghana compared to other jurisdictions, our tax-paying public or our businesses are very accommodating. I am not aware of any entity that went back to say because of the ruling by Judge Dodu Asa then, they were going to claim refunds from the GRA. We moved on. So Dan, my appeal to you is, and I know you will be looking at those notes, let the revenue recognize that this is, as I keep describing, an extremely narrow-based design tax. So to now introduce issue of compliance doesn't mean I need a TCC. When I go to the bank, will the bank now ask me to go back for a TCC or a letter from the GRA to say I'm compliant? When I open my account at the banks are able to determine whether it's a business or a corporate account. And to our mind, it should be easy enough looking at the fact that we've referred to the fact that the National Identification Act require that all these things be there. If I am already doing that, I don't think we need to go through the issue of compliance to push back what Parliament has determined. So that would be my appeal to the supervising ministry and to Isaac and his team to reconsider these issues and ensure that they do not use an administrative note to go ahead and introduce something that Parliament never required. Having said that, I would move on, and I really want us to address a lot of questions. It's almost top of the hour. The chamber has given me additional time. I want to concentrate on implementation. And if you remember, the chairman for the Finance Committee of Parliament says that the politicians have done their bits. They've done all the things they wanted to do. The law has now been passed. Leave it for the technical people to move on from this stage. And he said that on radio. So I will leave the policy matters. Dan can take note. The chamber can extract them, give them to Dan. It will help improve the policy or even the amendments if ought to be done. And then we can focus on implementation. So if from first GRA decides to go on with implementation, those are the aspects we really need to address because the law has been passed. So for those asking policy questions, please, you may say that I'll be skipping them. The other thing I would really want to plead is please post your questions in the Q&A rather than the chat, so I could have a dedicated platform for reading out the questions. Thank you very much. So Alex, I want to come to you, Alex. Based on your understanding of the E-Levy law, in your view, would E-Levy apply to loan interest payments? Loan interest payments to offshore and onshore banks? I don't know whether you got a question, Alex. So this may be coming from a banker or so that will loan interest payments to offshore and onshore banks apply for E-Levy? And once again, as I did assure Alex, the view you are sharing is not a PwC view. The view you are sharing is your independent view for now. If it's a PwC view, as you know, to have to go through certain procedures to be issued out in writing. So Alex, please go ahead and share your view. Thanks.
Okay, thanks, Abeku. Let me first start with the offshore. When you look at the offshore, obviously the bank that is being paid the interest is in all likelihood not going to be registered with the Ghana Revenue Authority for income tax or VAT purposes. And so my view is that if transfers are being made to an offshore from a bank account belonging to an individual, then based on item 5 of the second schedule, that it will attract E-Levy. When it comes to onshore, I'm of the view that if the entity, that is the bank, etc., would fall under the specified merchant payment, in that case, there would be an exemption to the extent that the bank is being looked at as an entity that is registered with the Revenue Authority. And so for the payment that is being made to the bank, E-Levy would not be suffered.
All right, thank you very much, Alex. So let me go to Dan and ask him that, in his view, especially as a policy person, would E-Levy apply to transfers to corporate shareholders in the form of dividends, loan repayments, interest payments? So these are corporate shareholders, and I think these are related party transactions typically. So your return, your loan, and interest payments, should E-Levy apply? Thank you, Dan. And maybe, Dan, what you can do is that you can pick that question and then also give us your concluding remarks, because you did tell me that you'll be going for a meeting from 12. And we need to allow you to go just so that we can avoid probably another E-Levy, jokingly. All right.
All right. So the question is that corporate transfers when you're making to corporate accounts.
No, to now corporate shareholders, yes. Corporate shareholders.
Okay, so let's get something very clear. If you're doing, if you're doing a bank transfer, okay, the bank transfers that are affected are bank transfers to a Momo account, or a transfer from a Momo account to a bank transfer, or in the case of an individual, when the person uses the instant bank platforms. So if the transfer is not from an individual, it's from a bank account, and is not to a Momo account, then it is basically out of scope to begin with. And I like Abeku's statement that you like rest exclusions to exemptions, because really what we have in this law are exclusions. They are items that are not covered. They are not necessarily exemptions. So anything that is an exclusion is out of scope, is not covered. And so then it leaves us with only the bank transfer to a Momo account. So if it's going to a Momo account and it's a transfer from a bank, then basically on the face of it, if it doesn't fall under any of the exclusions, then it's taxable. Now, what happens here, that question, now answer a question that came up earlier, that does it become a deductible expense? Yes, it does become a deductible expense. And realize, unlike other laws where we indicate, so if you pick the fiscal stabilization, we clearly indicate that it will not form part of your, what's the word for it? That you can't take it as an expense. This one, it was silent on it to the fact that if it's a legitimate business expense, then it can be claimed as a legitimate business expense. And in doing that, I think we also need to look at certain proportions. Now, and I hope my math is correct. If it's not correct, somebody should help me out. For me to pay E-Levy of 1,500 cedis in a year, I must make transfers totaling over 100,000 cedis. To make 15,000 cedis in a year, I need to do transfers over 1 million cedis. The reason I'm raising this is that, as I said, it's a business expense. So it gives us the opportunity to also do some cost-benefit analysis as to really, if I was using other methods and I was paying, which is cheaper. I mean, Abilko will say this one is free tax planning advice. But if we really do a comparison, we realize that we've kept, and I'm saying it because somebody asked about how optimal the tax is. You realize that really looking at it in certain terms, it's not as high as we seem to make it. We make it seem very high because we added to charges that already exist. But if we put it alone on it in itself and in its own stead, and if I'll quote what somebody said, hairdresser said, as part of my concluding remarks. This lady says that she sends money to her mother somewhere after Koforidua. Previously, she has to go to the station, look for somebody to give the money to. The mother must be at the roadside at the time the vehicle is passing. Otherwise, she doesn't get the money. The money comes back to Accra, and sometimes the money never gets back to her. So for such a person, she says that if I'm going to compare 1 cedi 50 pesos that I have to pay or the 3 cedis I have to pay in comparison to what I was using previously, I'll do it. It's an issue of costs and benefits, and doing the analysis dispassionately sometimes, not looking at the other things, but doing a dispassionate real cost benefit analysis, you see that is it going to cost me more to move away or going to cost me less? It's a decision each of us have to make. The other thing that we've always said too, that even if it will cost you more, consider the fact that, consider it as a contribution to national development. So I'll end with that one. And as I said, the other things, there are a lot of things that we'll address with the guidelines. I'm happy that we're having these interactions because they are raising questions which some of them we haven't looked at, some we've looked at from other angles. So it gives us the opportunity to do all these things and help make the implementation of the levy something that will be fair and that will benefit all of us. And as Abeku said, we'll continue to look at all these comments. I assure you, we'll look at everything that is brought up so we can help build our mother Ghana. Thank you very much for this opportunity.
So thank you very much. And extend our regards to your minister. Tell him that he's made us extend our time to 2 hours just to discuss the E-Levy. So he should look for some rebates for us for doing this.
Oh, it's a good national exercise.
All right, thank you. And then we'll catch up on the back. All right, thanks. So Ibrahim, your question, the first part, I would not direct it to any of my audience or my panel members. Truth of the matter is it's quite expansive and I don't want anyone to put themselves into trouble. But then on the other part, which deals with whether the tax, you would get a credit on their income tax, what I would say is, just as Dan said, you may get a deduction. And I said may, in other words, to say it could be direct or indirect through, say, capital allowance. But you would not get a credit as in an income tax credit. So please take note. You would get a credit, sorry, let me repeat, you may get a credit directly or indirectly, but you would not get it as an income tax credit. So it will be a deduction as opposed to a credit. All right, let me go on. Okay, Dan is gone now. So maybe I can direct this question to Isaac. Isaac, this question is coming from Kweku. My wife and I have an agreement that every month I would send chop money, or what more recent people may call housekeeping allowance or whatever. And the amount is sent into a joint account. When we look at section 2.2, it says that a transfer between accounts owned by the same person. I own the account from which I send the money, and the other account is also mine. I can withdraw from it. I can do all those things when I go to the bank and I want to withdraw, they will allow me. So clearly, that is also my account. Will transfer from my individual account to a jointly held account with my wife attract E-Levy? Thank you. So that's coming from Kweku. So Isaac, if you could please address that for me.
Thank you, Abiku. This question is loaded with some traps and booby traps in there.
Yes, and I was specific. I didn't say friend. I said my wife. We sleep in the same house. Bible says the two are one. All those things are there. So,
I would attempt as answering, but my first comment would be that in the VAT, you remember we have this terminology wholly and exclusively, if you remember. So I will start with that rendition, that the account, by our understanding, should be wholly and exclusively owned by you. Insofar as it is partial, we don't see that you own it. So for me, joint accounts are not wholly and exclusively owned by you. You partially own. So it may not. It's my opinion. Probably the ministry may say that once you are a party to it, you own it. But our understanding is we are using and borrowing something from VAT wholly and exclusively. So that will be my answer, that you have to wholly and exclusively own it. But Abiku, before I give out, you made a mention of the fact that the law didn't mention compliance, but I am a tax officer. Compliance is a broad word in tax sphere, and the broad word compliance entails so many things. So registration is a compliance activity as a GRA. Now, what is the evidence to the public that the person is registered? So Dan made a distinction between being registered for a number, that is a taxpayer identification number, and use it for transactions as the law requires that you can be registered for that. But it stops short of when you are registered, is that the end of it? No. There are applicable taxes that you should be registered with, and that is where compliance comes in. So you may be liable for PAYE, you may be liable for VAT, you may be liable for a number of tax handles. From the GRA's perspective, it is a compliance activity. So even though the text of the law says that you should be registered for income tax, for us, it is compliance. We will not say that you are not compliant at other things, so we are denying that. We will not do, because the law is very specific that it's for income tax or VAT. So you are registered, all right, you have the taxpayer identification number. It doesn't end there. There are some few things. So for the charging parties, we may need to give them evidence that the person is registered. And we currently have the 10 registration certificate, which normally we used to issue, but that wouldn't solve what the law is requiring. The law goes further, that income tax or VAT. For VAT, we could also give a copy of the VAT certificate, which would have sufficed. But for income tax, after the amendment of the Income Tax Act, when we used to issue registration for only income tax, I believe we've not been doing that. So we currently don't have an income tax certificate that we could have given to the person as evidence that he's done with GRA. So the next document available we could give is the tax clearance for people, the first timer who has to go on the charging entities platform for the first time, a one-time activity where we place you over there. That's my comment. Thank you.
So thanks, Isaac. I know we can always speak this offline, but just some of these questions are asked because of my audience, all right? So if someone says that I have a taxpayer identification number, even the description of it clearly shows that I am registered with you. I don't self-generate that number. That number is generated by a government agency. Isn't that sufficient evidence of my registration?
The answer is no, because if you look at the taxpayer identification numbering system, it was first promulgated in the year 2002. It used to be an independent agency which was providing services to a number of state agencies, including the then IRS, the then VAT, the then Customs, and other government agencies. When we amalgamated into one and absorb that responsibility within the authority, we distinguish between that registration from the core tax that we were doing. So there were people who were registered and had the number, but they were not being treated as taxpayers paying for any of the tax handles, because their reason for getting the number was just so they could interact with some of these state agencies. An example was somebody clearing a good that somebody have sent to them would come for this number, or somebody registering land will come for this number. So once they get the number and they are not involved in taxable activity, we didn't go the next leg to bother them until they get themselves involved in taxable activity. Then the next bet kicks in. So it is being used in dual purpose within the spheres of GRA. You may have the number, but you are not involved in taxable activity. So a student who is not involved in taxable activity may get a number. Even a baby that is being registered to own shares in a company may have the number. So having the number is not synonymous to involvement in taxable activity. Thank you.
All right. So business committee, you've heard the plenary comment. Okay, so maybe from the perspective of a consultant, maybe let me get Alex to also comment, because obviously his clients would be reaching out to him. One takeaway point here is that it's important that you at least hear this plenary comment, so that if you want to engage the charging entities, your banks, your electronic money issuers, your payment service providers, you can go reach out to them and ensure that you have a competitive edge by making sure that when people deal with you, they don't suffer the E-Levy. So that you can use it to flag that you are an E-Levy compliant person as part of your compliance accolades. So please take notes. Views may be different, but at least you are hearing the initial or the preliminary comment from a key member of the E-Levy technical committee. So please take note and start doing what you need to do before first. So Alex, please feel free to come in, and that makes it interesting. Go ahead.
Thanks, Abeku. I disagree. I disagree somewhat with Isaac. Though, of course, I would always advise any taxpayer to be on the safe side and to make sure that they fulfill all righteousness, so that to avoid any kind of litigation or any kind of conflict with revenue authority. But then the comment that I would pass is that, first of all, the government came up with this law and has the opportunity to make it clear. Even where it is not clear in the first instance, government always has the opportunity to go ahead and amend it. That aside, the E-Levy Act in itself allows the minister to issue regulations, and these regulations can clarify some of these points so that there is no doubt in the minds of a taxpayer. So it becomes more of an additional burden that is imposed on the taxpayer, where, contrary to the express wording of the law, additional requirements are put in. Those additional requirements could very easily have been stated within the law. And then maybe because this is a bit related, maybe something having to do with an earlier comment Dan made with regards to other laws coming into play. Yes, I do acknowledge that there are a lot of other laws, some relating to some of them administered by Bank of Ghana, etc. But in this case, we have GRA being the mandated statutory body to collect the taxes and also to administer it. So if those laws are not administered by the Commissioner General, then on what basis does GRA then impose penalties and interest, for example, on a charging entity for example, for not remitting the funds within 24 hours or for not providing a report to a specific specification, when no tax law, and by tax law, I'm looking at the tax definition of tax and tax law based on Act 915, that's the Revenue Administration Act, when no tax law imposes such a burden on them. So these are some of the thoughts that come to mind, and I believe that these are valid thoughts that businesses do, and valid concerns that businesses do share. That whereas the government can be clear in the laws, leave certain things unaddressed, why then does government then come back again and try to implement it contrary to the express wording of the law?
All right, so thanks Alex. This makes it beautiful and interesting. when varied views are being shared. The whole idea is, what I keep saying, is to create the kind of Ghana we want. So let such enriching conversations continue. Alex, let me give you this question from Yeboah, or Isel. I think it should be Isel. He is asking, if I borrow money from a telco and I am repaying back that money, in other words, he's doing Momo, he took a loan and he is now paying back. He is asking whether that should attract E-Levy based on the law.
Okay,
if he
so
borrows money from telco and he is paying back, should it attract E-Levy based on the law? Thank you.
Okay, so my view is, first of all, considering that it's being paid back to a telco, will the telco down be looked at as a specified merchant payment, a specified merchant? Will that fall within that category? And I am inclined to say yes, to the extent that the telco is registered with the Revenue Authority for income tax and also VAT purposes. Then in that case, that particular payment should be exempt. So that is my view on that. Of course, it falls within the scope, but then I believe that it falls within the amounts that are, because it has to do with a specified merchant payments, E-Levy should not apply.
Great. So let me go to Isaac on this. And audience, please, if you wish to ask your question orally, you can lift up your hands and I will try to call you, so that probably Isaac can also hear it from an oral perspective, the questions that you have. So Isaac, a quick question here. For companies who use mobile money aggregators to deduct money from mobile money wallets of clients into companies' bank accounts, reference to insurance premium specifically, how does the E-Levy apply? I think it's quite a broad question, but Alex, you can attempt, sorry, Isaac, you can attempt it. So basically, there's an aggregator, you are paying your insurance premium, maybe using mobile money. An aggregator also deducts it, or the payment system deducts it. How should E-Levy apply in respect of those companies when you are making insurance payments? Thank you.
I mean, could this forms one of the complex scenarios that we keep battling with? Each day we are given a different scenario that we don't have any conclusive outcome on. So I will place this particular one under one of those inconclusive ones. But before I give out, let me respond to a little one that Alex said about the time we've given to the charging entities, whether there is any law. Yes, the Revenue Administration Act gives the Commissioner General power to request for information, not necessarily a return, or to ask a taxpayer to act in a particular way. So where the Parent Act, the E-Levy, does not make provision, that is why we are coming under the Revenue Administration Act. And in the Revenue Administration Act, the Commissioner General has the power to ask any taxpayer for information that will aid his work. So we are covered under the tax law when we request that, give us the information on what you've collected and also remit the amount of money within this time frame. If you doubt, that is why the law courts are there. Thank you.
Okay, so thank you very much, Isaac. Very good response. So audience, please take note. The Revenue's view is that by that request, it's a request for information that the commissioner is asking. So one may ask, is it really a return or just a mere request for information? The second bit is on going to courts. My response to that as your moderator is that litigation should be the last thing that you should do if you're a business person. Our decision making is so quick, we want to finish and move on. I've seen in other countries that I've worked in run on revenue. And I pray we don't get to that level in Ghana where everyone decides to sue the revenue and the revenue cannot even defend cases. I don't think it's good enough. So I know Isaac just said that jokingly. Please don't let us go to court unless there is a need to do that. We don't want to run our revenue out of capacity. Thanks. The next question I have here, and maybe I'll direct this to you, Isaac, and then maybe the next one to Alex. Isaac, does the E-Levy apply when you are making a transfer to a crowdfunding app? Does it apply when a customer is making a repayment to a loan provider? I think that has been addressed. What does the GRA mean by specified merchants? I think that has also been addressed. So the question you have is the first one. Does E-Levy apply when you are making a transfer to a crowdfunding app? Thank you.
Okay, so I'll take it up this way. When you are making a transfer to a crowd funding app, you have to try to identify the elements that are involved here. So the first, there will be your account, which could be a bank account or a mobile money account. That will be the first thing. So it means that the transfer is emanating from you. Now, the transfer has to terminate at a certain type of account for you to qualify as what do you call a taxable transfer. So you look within the space. Crowdfunding account will probably not fall within any of the accounts listed in the first inclusion, that is mobile money account to mobile money account. So I'll ask the question, the recipient, is he having a mobile money account? And me, the sender, either I'm sending from my bank account or I'm sending from a mobile money account. So where is this transfer going to terminate? The beneficiary. I need to identify the ownership of that account as part of this flow. And in some of the cases, it is not clear the ownership of that account. It doesn't seem to fall within the charging parties that the law has specified, those broad 4 categories. So where you are moving money and it is terminating at an account that is neither a mobile money or a bank account, we seem to have some kind of a gray area here.
All right.
And this could be one of the gray areas. That what kind of account is the termination going to be?
All right.
That seems to pose a challenge.
So thank you very much. Mauli, your question is policy, in my view. The UK Chamber will share to the ministry to address. So valid questions, but it's policy. Let's focus on administration because we have just a few days to start the implementation, of course, subject to other things in court. This question about, so maybe let me come to you, Isaac, and get your view. I know Alex expressed a view as the moderator. My view may not be known here. Isaac, what's your view on a corporate entity transferring money to a company outside Ghana for which withholding tax has already been deducted? Should the E-Levy apply again? I know you've addressed it. I know I've addressed it, but it doesn't hurt to mention it again. So a company transferring money, of course, that will be usually through their bank account to another entity outside the country. The person is asking whether E-Levy should apply. Thank you.
Okay, so at least we compare this one to the earlier question. This one, it is to another bank account, but that bank account does not reside in the country. It is a foreign bank account. So for me, if you look at the scope, when a corporate account is making a transfer to a bank account, the law didn't mention that. So you would nicely say that it is out of scope because it is terminating at a bank account. So we'll say that these are the out of scope one that the law shouldn't apply.
So I work in Ghana as an expatriate, Isaac. I take my money. Every month, I issue a standing order to go to my account in Mauritius. I'm only an expatriate in Ghana. Should that remittance be subject to E-Levy, considering that this is an amount or a transfer to the account owned by the same person? What's your view on that, Isaac? Thank you.
Another gray area. So the only way we can know that the account is the same person is not through another identity in another country. So the identity in the other country would probably be your passport or the national identification of that country. For us, the identity we are currently looking at is the Ghana card for individuals or the taxpayer identification number for corporates. And non-residents can also be registered. Resident expats can have the Ghana card. So
yeah, but it's been suspended. Isaac, has been suspended by the NIA now. With
for
focus
for the resident non-citizens.
Yes.
Well, I believe this may fall part of the exceptions that we need to be looking at, that there isn't a straight answer.
All right.
Yeah.
That's fine. Okay, so Festus, Kwanzaa, thank you, but your question is quite policy. I wouldn't go to my audience for it. I think this has also been addressed. If you transfer from one person's account to another account in the same bank. Okay, let me still read it. So Alex, Frederick is asking, bank transfers from one person's account. And maybe the education I'll add is when you use the word person in tax balance, it could be natural or it could be artificial. So we need to know whether you're referring to an individual, because that broadens the question. So when a transfer from one person's account to another person's account in the same bank attracts E-Levy. Alex, do you want to address that? Thank you. Will a transfer from one person's account to another person's account in the same bank address or attract E-Levy?
Yeah, Abiku, I would say that if the person you're talking about is an individual, if it is that the transfer is originating from an individual's account, then I would say, and the recipient is also an individual, then I would say that yes, to the extent that the recipient is an individual and not a specified merchant payment, and the transaction is originating from an individual's bank account, then of course E-Levy would apply. That is my view. But Abiku, just allow me to just comment on the earlier one with regards to an expatriate sending money to his own account. I think that, like Isaac rightly mentioned, it may be a bit gray, but looking at it as it is, unless maybe through a refund mechanism, my likely guess is that it is going to go through. If that transaction is going to go through, the tax is going to be charged, unless maybe later on the person comes with a lot of documents and to back the fact that it's his own account, and then GRA decides to consider those additional information. I think that the person may end up having to pay the E-Levy.
All right, thank you. As a moderator, once again, I'm restrained from sharing my opinions on these matters. The last question I'll just ask you, maybe Alex, to address is Princess asking, would the E-Levy be a new item on the VAT invoice? Do you want to address that?
I would say no. Abigail, I would say no. I would say no because it does not fall within taxable supply. I mean, it's a different tax on its own. I would say no.
All right. So thank you very much. And we need to be drawing the curtains. For those we couldn't address your questions, don't worry. We'll push it to the revenue and the ministry. As Isaac leads his team to work on the administrative guidelines, I'm sure they will pick up all these questions to inform what they write for us to be guided appropriately. So on this note, I would want to ask Alex to give us his concluding remarks. Then I'll move to Isaac. I'll conclude appropriately, and then we can bring this session to a close. Thank you very much. So Alex, in some few minutes, a minute or two, can you share your final remarks with us? Thank you. And just before I forget, please try as much as possible as the final comment comes to give your feedback so that the chamber can improve on this webinars. Thank you. So please give your feedback. It's appearing on your screen. So in the meantime, Alex, please go ahead and then give us in a minute your final remarks. Thank you.
Thank you, Abiku. So for my final remarks, what I would say is that this new tax, the E-Levy, is Yes, currently it's new. Obviously, there are going to be some implementation challenges. What I would hope for is that the Revenue Authority, especially bearing in mind the fact that it's new and it being also a new form of act, that there would be some leniency when it comes to the application, so that people are not unduly penalized for mistakes that happen as a result of it being new. But that aside, I think that there are additional areas that the law needs to be clear, and would all appreciate if the clarity that is provided does not just come from administrative guidelines, but come from a legally backed regulations on this, or maybe even amendments to the current act that would, in my view, have the oversight of Parliament and give it a stronger backing, instead of, for example, just administrative guidelines. We all look forward to how it is implemented. We all look forward to having, as Abeku and Daniel and Isaac has already mentioned, a better Ghana with good revenues to be able to achieve all that we all desire to have. Thank you, Abeku.
Thank you. And Isaac, Fachemi, but I'll come to you again. As you give your final remarks, there's a comment here I think you need to hear, and you can add that to your concluding remarks. So instead of merchants going through the charging entities, for the charging entities to come to you, wouldn't it have been a lot more efficient, since the GRA should have database of those who are registered, to populate, and please correct this, is it EMAS, is it common platform, and then the last term you used, is it middle wave? Wouldn't it be better for the GRA to rather do it at their end rather than getting the charging entities to do that? So you can address that and then add your final remarks. And Isaac, apologies. Thanks.
Hello, Abeku. Thank you very much. So I believe that's a suggestion. We are doing something similar as he's described, but because it is a dual kind of requirement, it is not wholly a GRA requirement. It is part GRA, part the charging entity. So we first get what the charging entity are doing, and then we feed onto it with what we are also doing. So it's not a single point that once GRA is okay, we are done. We also have to look at what the charging entity are doing. So the two of us are all involved. The charging entity must provide you the payment service, and then GRA must collect the you on our tax roll that you are registered. So it is a two-pronged process. That is why we are using the common platform for that assignment.
Okay, great. Isaac, I was asking, is it EMAS? Did I pronounce it correctly?
As for the name, we haven't really settled on a name. So all the adjectives can go. The middleware can go, the common platform can go, the EMAS can go. It hasn't been settled on the name for the platform. All
right. So in a minute, please give us your concluding remarks. And our audience, I'm sure Isaac gives his concluding remarks. You can see what is on the screen. Thanks. Isaac, proceed.
Thank you very much. We appreciate the opportunity given to the authority to talk to businesses. It is the interest of the authority that doing business in Ghana will be eased. So we are doing every effort not to frustrate businesses. That is why the law had made a lot of provision for compliant taxpayers, where compliant means that they have settled their involvement with the tax authority. For such businesses, you don't have anything to fear. The authority is open to listen to your concerns. Before I forget, let me put some numbers up and some emails up that you can reach the authority with any concern, especially concerning this E-Levy. We have a toll-free number, 0800 900 110. I take it again, 0800 900 110. That's a toll-free number you can use to make some form of inquiries. We also have an email, info@gra.gov.gh. info, that is info at gra.gov.gh. Then we also have feedback at gra.gov.gh. So you can use these channels to reach the authority if there are any concerns that I might have left out within this webinar. So I thank you all for the opportunity. Abeko, over to you.
Thank you very much, Isaac. My ask of you would be to post, as I do the concluding part, to please post it in the chat so that our audience can pick them up and then use them accordingly. That would be great. So as we end, I would like to say thanks to the chamber for inviting me to moderate this session. We believe that at PwC, we are a community of solvers. So we've had a tax-related conversation. There are documents that are available online for you to pick to broaden your view on taxes. Just as I said, the document that you would pick are general information prepared to the best of our abilities, but they do not constitute a tax opinion. So please reach out to your consultants, whether legal, tax, accounting consultants, and work with them to ensure that you implement this E-Levy to the best of your abilities, subject to what will happen at the Supreme Court. For those who want to appreciate better the origin of this conversation, we also have the 2022 Budget Digest you can download. And then lastly, what you can also find is our training curriculum. You cannot take out the importance of knowledge and up-to-date knowledge in running a very successful organization. So these documents are available. You can reach out to us. It contains contact information for you to do that and do it well. So for those who thought I was a ghost, I'm not. I am your young man looking here, a partner at PwC, proudly a fellow of the ACCA, the local accounting body, the ICAG, and also a tax fellow. If you want to reach out to me, please feel free to drop me an email, and together I would work with you to help solve the very important problems of our society as we build trust together. Please, I would encourage you to follow the various social media handles of the UK Ghana Chamber of Commerce. Please remember to complete the feedback so that the chamber can improve. And I would assure you that Sarah and her team would gather all your questions and forward them to the ministry and to the GRA to address it. And I know Isaac will help address it administratively and we would not end up going to court, so that we can have an authority that functions on collecting revenue than worrying itself in the courtroom. So thank you so much. And may God really, really, really bless our homeland, Ghana. And may we build countries that are nicer than the places that we seek to go for holidays. So Sarah, thank you for giving us an additional time. We've taken an additional 40 minutes, even though with that, we still couldn't address all the questions. But it's worth having addressed the additional ones. So thank you so much. And we appreciate this opportunity. Thank you. So Sarah, back to you for your closing remark, if any.
Thank you, Abeko. And thank you, everyone. First of all, thank you to our panelists. It's been an insightful discussion. Time has not been on our side. I'm sure we would have discussed everything there is to know about this. We would have been able to answer every question that was posted, but we are grateful to you for taking the time to share your insights with us. And thank you so much, everyone, for joining us this morning. We will definitely come again with another very important popular topic. Thank you very much. Bye-bye.